good.
We made it. We are at the Airbnb after a long day of traveling to get here. And then once we got here, a bunch of doctor's appointments, but we're settled for the night and I've still got some work to do. I've got a rental property that's been on the market for a couple of days. We've had quite a few offers come in and I wanna walk you guys through the process of looking at the offers, evaluating them, the different types of financing, the different amounts, all of that good stuff. And you can let me know what decision you would make. I'll admit that something I'm a bit anxious about for this month that will be here is trying to work and trying to be productive, both here in this new space and when I'm staying at the hospital. And so I've brought along a couple of things that I think will help. For one, I've got a whiteboard. If you guys remember what my normal filming setup looks like, I usually have a whiteboard. I have my goals written down on it. And so I think just having this and being able to write down my focus for the month is going to be super helpful. I also got a monitor so that I can not just always be on my laptop, but at home, I also really like having my monitor. And I think that's gonna help with my productivity and hopefully not being punched over the laptop all the time while I'm working. I also brought along a couple of other things from home, like my mechanical keyboard and my mouse, all in the hopes that I can be kind of productive while we're here. I'm super tired, but this needs to get done and I wanna share it with you guys. Also, let me know what you're thinking of Vlogmas so far. I definitely made this month that's already gonna be harder on myself by deciding to do this, but I've appreciated all the kind words that you guys have sent so far. I've appreciated you tuning in every day. And if you guys are rocking with me this month, I'm gonna rock with y'all the best that I can. Let's look at these offers. All right, so I realized when I was in the car driving over here, I realized now that I don't have the Wi-Fi, be back. Okay, I'm back. Also, hopefully that lighting is a little bit better for you guys, but anyway, so let me pull up these offers on my phone and let's talk about it. If you haven't seen yesterday's video, that's where I talk about the same property that I have up for sale, but I talk about how I got it, how much I paid for it, how much I renovated it for, and how much money it's made me in the last 2 years that I've owned it. In today's video, I want to talk about how much money I would make if I sell it. I realized on the way over here that because of how quickly I'm gonna put out this video, you guys will actually see this before I accept or negotiate on any of these offers. And so I wanna go through and tell you the differences between the offers on everything but price. Because I do know a couple of people in my area who watch my YouTube channel, some of whom may be amongst these offers or know the people that have offered on this. And I don't want to tell you guys what all of the offers are, because then that would be telling them what all of the offers are. And then that would give them some strength when negotiating with me. But we're gonna, for now, go with what the asking price is, because all of the offers are relatively close to the asking price anyway. The first offer that came through is actually one of the most interesting. So it is for, let's just say, $375,000. That's what the property is listed for, but it has what's called an escalation clause. And so an escalation clause means that they are offering $375,000, but they have an escalation clause for $385,000, and they want to do that in $1,000 increments. So what this means is that they want to offer $375,000, but if we get an offer higher than that, let's say we get an offer for $380,000, they will then escalate their offer to $1,000 above that. Other than the escalation clause, some important things for you to know are that this is a conventional offer. So the person would be getting a conventional loan for this, and they want 10 days of inspection, and they'd be willing to close January 8th closing. That is offer number one. Oh, one other thing that I forgot is that they are offering $3K of earnest money. If you don't know what earnest money is, go check out this video right here. But it's basically what somebody puts down when they make an offer to let you know that they are serious. So they're offering to give us $3,000. And if they don't back out before their 10 days of inspection time is up, then that $3,000 becomes non-refundable. So if for some reason between the end of that 10-day inspection and the January 8th potential closing, If for some reason between those 2 dates, this person backs out, then the $3,000 would stay with me. It would be non-refundable. Now let's compare this to offer number 2, which was very, very similar in terms of price. There's no escalation clause, but what's really interesting is that this one is cash. It also comes with $4,000 of earnest money, so a little bit more than the first offer. They want 15 days of inspection, and they're willing to close on January 3rd. Now, the biggest difference between these two offers is obviously the type of financing that they're going to use. And I must say, cash talks, right? Because one of the things about somebody who's using a conventional or an FHA loan is that during their inspection period, they're going to be required to get an actual bank inspection from whoever their lender is. Whoever's going to be helping them to buy that property is going to inspect the property and make sure that it is in lendable condition. And if there's something that the lender doesn't like, then the person may not be able to get the loan, and therefore they'll back out of the deal. And that is one of the risks that you take when you go with someone who is buying with a conventional or an FHA loan. Now, the person who's buying with cash is not required to get an inspection from any type of lender or official entity. Even though they're asking for 15 days of inspection, that's usually just for the purchaser or the investor to go in and look at the property themselves. It's not something that's subject to approval of the third party. So typically people feel like selling to someone who's buying with cash is going to be more of a sure thing. They may be less likely to back out during their inspection period than someone who's getting traditional financing. But there's two really important things to consider, and one of them I think has a kind of moral or ethical component to it. The first thing to consider though is that this property is in really good condition. I completely renovated it 2 years ago. I showed the before and after pictures in yesterday's video. I'll put the before and after of the exterior here. Go check out yesterday's video to see the interior change. But this property is in really good condition. And so I don't see any reason that a conventional lender wouldn't want a loan on this property. Now, if it didn't have hot water, if there was a hole in the roof, or it was infested with mold, those are the types of things that usually get denied by a traditional lender. I don't have to worry about that in this situation. The other factor, which has a little bit of a moral, ethical component to it, is that typically someone who's buying with all cash is an investor, and they obviously have a lot of money. Someone that's going out to get a loan, conventional or FHA, might be an investor, but they also might be an owner-occupant. They might be somebody that wants to move into that property and live in it themselves. And I really connect with that because my first property that I bought was a duplex, and I bought it with an FHA loan, and I bought it to live in and rent out the other side. And that was how I got my journey started in real estate. It also just helped me lower my living expenses at a time when rent is so high and mortgages are so high. And so if the seller that I bought from was unwilling to accept an FHA offer because of the extra hassle and because it's not as sure as cash, then I may not have gotten my start in real estate investing. And so I'm trying to be aware of that as I consider these offers. Yes, I want to do what's best for myself and my family, but I can't help but think that someone who is now in the position that I was 2 years ago might not get the chance to start on their journey if I don't even consider anything but cash. But there is a third offer that kind of applies the best of both worlds. It's right around the same price, so let's just call it $375,000. They want 10 days of inspection. And here's what makes this one really interesting. It's conventional, but if for any reason it doesn't get approved by the lender, then it will convert to cash, and they'd be willing to close on the 10th of January. So this offer probably isn't a first-time home buyer or someone who's new to the game because they do have that cash. They've given me a little bit of a backup plan that they intend to go through with this purchase, because if they find something that doesn't allow the loan to go through, they will then back it up with cash, which to me makes it seem like they really, really want this deal. Whereas if I go with one of the other two offers and they find something that they don't like during inspections, then they can back out, get their earnest money back, and then I potentially have to start going through this entire process again, and I might lose out on one of the offers that I did have on the table. Regardless of which offer I go with, I'll likely make about the same amount of money. So with the property selling for $375,000, after my fees and commissions and closing costs, I'm gonna have about $355,000 left over. Now, my mortgage balance on this property is around $260,000. It's either $260 or $265, I can't remember right now, but I'm too tired from traveling to go look. But What that means is that I will have a pre-tax gain, meaning at closing, I will get about $95,000 in my pocket. Now, I am going to have probably somewhere around $15,000 worth of taxes to pay on this sale, leaving me with about 80 grand of profit. The other thing I could consider with this property though, is doing what's called a 1031 exchange. What this would mean is that instead of at the sale, the money going into my pocket, instead it would go to a 1031 exchange intermediary, it's been a long day, intermediary, I think that's how you say that word. It would go to them and they would hold the money for me for a specified amount of time where I was able to go look for a replacement property. And if I could find a replacement property or investment to roll my gains into, I would then avoid some of the capital gains taxes. I would avoid some of the depreciation recapture taxes. Basically, I would keep more of that money. Technically, the money wouldn't go into my pocket, it would go into the purchase or down payment for a different property. Now, there are a lot of rules about the 1031 exchange. If you guys want me to break them down in a future video, definitely let me know by putting your favorite emoji in the comment section. But one of the key things about the 1031 exchange is that you have to find a replacement property in a very strict set amount of time. And if you don't, then everything that you made will be subject to those taxes anyway. And I just don't know if right now, at this time of year, with what's going on in my life, I should take on that extra stress of trying to find another property. So let me know what you would do. Option 1, just keep the property. Option 2, sell it and take the cash. Or option 3, sell it 1031 and try to find a replacement property. I'm looking forward to reading your comments. I'm also looking forward to going to bed. Thanks for hanging out with me. I'll see you tomorrow.